The Bank of Japan held off launching fresh easing measures today, despite growing calls for further stimulus to spur the economy and as it warned of a high degree of uncertainty ahead. Joining me down the line to discuss is Wagner, Senior Economist with Commerzbank. Now Marco, Japan, the world's third largest economy, contracted in the July to September quarter, nudging it back towards recession and renewing calls for central bank action. But what was your opinion on the BOJ's decision and subsequent statements?
Well, what we have to keep in mind is that the monetary policy is, and it should be, forward-looking. To my mind, this means that the central bank should basically leave behind the slump in the third quarter and should rather concentrate on the future. And the Bank of Japan actually is doing this because the central bankers already said that after the weak fourth quarter, which should come now, there should still be the beginning of a moderate recovery afterwards. And the central bankers consider this as a result of past monetary easing measures. So they are actually quite forward-looking.
Most economists had previously expected stimulus to pause, but pressure for further action spiked last week after Shinzo Abe called on the bank to usher unlimited easing and vowed to strike an agreement with it on new measures if he wins December 16th polls as expected. Now, you have said previously the Bank of Japan can't solely kickstart the country's economy, but what action do you think Japan does need?
Well, in general, I think Japan needs structural reforms. So these are the center and the core. The population is aging, for example. The services sector is highly regulated. The agricultural sector is strongly subsidized. Many products for end users are not very attractive on the world market. Among other examples, these are the key points where, to my mind, both the government and the business should dig in. There is a strong need for liberalization and for deregulation of services, deregulation of the agricultural sector and the labor market, for example. Japan also needs to open up the markets and face international competitiveness. And further on, as I said, due to the aging society, the government is also in duty to set the right incentives to foster productivity. So to my mind, this will help the Japanese economy in the long run and not any growth-stimulating measures by the government or the Bank of Japan.
Some analysts have said the purchase of government bonds is a drastic medicine, a powerful drug that might work, but carries the risk of devastating the whole economy. Do you agree with this sentiment?
No, I generally do not agree, for the reasons I just mentioned above. With the purchase of government bonds, the Bank of Japan can indeed lower the longer-term interest rates and also lay the ground for economic expansion. However, the demand for economic expansion and the demand for credit has to come from the real economy, and hence there is a basic need for the structural reform, as I said before. That said, the consequence of a highly expansionary monetary policy, which means an extensive supply of money, basically, which does not meet the corresponding demand, is very likely to create bad investments and can finally lead to economic bubbles.
And what are your short-term expectations for the yen in light of the recent parliamentary revelations and Bank of Japan in action?
My guess is that Mr. Abe will actually win the race on December the 16th, and also recent polls suggest that he might get a good majority in the Diet. Against this backdrop, he should be able to bring forward his ideas with regards to monetary policy, and this indeed means much more expansionary monetary policy. Therefore, I think the yen has currently much more potential for depreciation instead of appreciation.
Some believe the economic recession in the second half of 2012 and the holding of a general election will prompt the Bank of Japan to step up its monetary easing efforts. But what do you think is next for Japan?
Well, I do not think that the Bank of Japan itself or the Monetary Policy Board itself will take this event as a game changer. However, I do see two game changers. The first one is the announcement of Mr. Abe to change the central bank law and pull the bank much closer to the Ministry of the Finance. And the second one is that the term of Mr. Shirakawa, the central bank governor, will end in April 2013, and I strongly suppose that he will be replaced by someone who is more in favor of stimulating the economy. And hence, in both cases, I think the Bank of Japan will be likely to step up its easing efforts.
Marco, thank you so much for your time and insights. Well, that's all from me at the moment, but click back to Dukascopy for a look at which other news events could shape markets in the week ahead interview with my colleague Thomas Taplin. Bye for now.